Hello and welcome to today's video, which aims to prepare you for the start of next week, what has happened in the markets on Friday, and how best to position ourselves and profit from it, just like what I described in latest Friday's extensive video, midday recorded and posted. I will post a link to it, so just review it, so I'll let you know how to turn a good day into a great one, and how to benefit on correct reading of economic data and make predictions about where the market is going and ultimately closing. You pretty know well my site and what I do for clients, about my rich Twitter feed and YouTube channel. Thank you for liking this video and subscribing, because all the videos are connected to each other and I post them irregularly during the days, so make sure that you are notified through clicking notifications right when I post a new content. You know pretty well how I described the key data that have arrived Friday, be it the job market ones and the consumer data University of Michigan set. The next takeaway is that Fed rate cuts are farther away than it was appreciated before, and it finally brought the lull in credit markets to quite an abrupt end, as you can see from this yields chart, where not just the long end of the curve was moving up, but also the short end, reflecting that perhaps it's only October now when we can expect a new rate cut by the Fed. Is it a realistic expectation, or will it be dialed back even further? Well, let's see. Currently, this is the way the betting markets are positioned, and it was a huge negative surprise for equities and for risk-taking in general. As you can see, US dollar is also surging after a successful backtest of 108, which had been quite a horizontal level. If you stretch this chart further to the left, it's a daily one, and I see US dollar heading for the next technical milestone, located in the 112-113 area. Key question is, when does the Bank of Japan lose patience and move to act in defense of Japanese government bond yields and the yen itself? Right now I do not see a cause for panic developing in the currency markets. Right now it's not on the table, so we can have quite some more days of US dollar moving higher against the major currencies. So these are the prospects for the forex market. But the real move is happening with respect to equities is happening in this bond market overview, where quality bonds are sinking faster than junk speculative ones, but junk corporate bonds, whether it's the ticker symbol that I'm showing or JNK, these are joining with the downswing, and that represents quite a shift in risk-taking as perceived by deferred expectations of Fed rate cuts. This was just part of the charts, such as this one that I am tracking intraday and on a closing basis for clients, whether they are swing or intraday. That's what had allowed me to call in the prior video, check it out, to see what's in it for you and how I take care of clients knowing these market predictions first. How and why S&P 500 and not just this leading index was, in my opinion, slated for closing near the intraday lows. This is a view of percentage of stocks trading above their 50-day moving averages, be it within S&P 500 or within Nasdaq, and the final metric is equal weighted S&P 500, and you see quite well these leading to the downside and market breadth further deteriorating, which is quite the hit, echoing what has happened 2 trading days ago. Forget not that Thursday was Carter Day and therefore markets had been closed, so that's the explanation for one missing daily candle within the weekly closing values. So this is highlighting what I see as eating supply, if I were to describe it in the context of S&P 500, or trying to break to the downside as the technical deterioration, looking here solely from the market breadth perspective. Of course, I'm providing clients with more views, be it from leading sectors or individual stocks as per popular demand. These moves look to be rather starting than ending, so we still have a way to go in this developing correction that had been triggered and exacerbated by good incoming economic data Friday, and you had reviewed how I was positioned at the start of the day and how I immediately, based on the incoming data, changed my mind to position myself and clients for winning opportunities delivered on Friday with barely any drawdown intraday following the renewed call for markets to go to the downside. So are we going to be seeing more of the same Monday? Stay tuned for the extensive analysis and new video. Thank you for liking this one, subscribing to the channel and commenting. One more chart. This is the hourly one. You see very modest upswing and attempt to come up, and initial retracement of the downswing, and then the real hammering came, and unsuccessful intraday attempt and heavy selling into the close, which is carrying a message of itself, and that applies not just to Monday but beyond this, and it echoes the market breadth message that I had described a couple of minutes ago. So this chart in itself is sending a strong message, whether we are likely to see an upside reversal, sideways trading, or some downtrend continuation. So stay tuned for more. My join URL to help you select what's the right product for you based on what and how you trade, and professional journey you know very well, and obligatory disclaimer. Have a great weekend and talk soon again.